you sort of see these big cycles, particularly in developed world currencies, that play out over something like 15 years, typically 10 to 15 years. And it's the sort of thing that is slow moving enough that people don't notice the turns and then eventually take the turns for granted, the trends for granted, and therefore sort of position in a way that gets burned as it reverses. And I think that's basically what we're seeing here. Like post GFC, the dollar was at secular lows, and the US obviously had much better stimulative policy and better managed economy than places like Europe and others coming out of the GFC. And that kicked off essentially 15 years of a boom in investment in the US. And there was always some story about it, whether it was, quantitative easing supporting US stock prices, or whether it's an AI boom, or all, that was sort of the last thing was the AI boom. Basically what we got to was a point something like 2 years ago where the US was absorbing something like 70% of every incremental dollar invested in global financial assets, which obviously is extreme relative to the productive capacity of the US economy, or even the companies in the publicly traded companies. And so that's the sort of thing where just the shift from no longer allocating 70% of the capital to the dollar or to US based assets to even something like 60 creates a big shift in the capital flows and the demand for those assets. And as a result, starts to sow the seeds of the reversal. And that's largely what we've seen here. Now, people will point to sort of specific flows data and say, oh, well, it looks like foreigners aren't actively selling US assets. That's true. But one of the things that they are doing is they're shifting from an environment of passive, unhedged positions, particularly in equities, to starting to increase their hedges for the first time as the dollar has shifted against them, meaningfully against them at the beginning of the year. And so we're seeing a lot of folks who sort of took dollar currency appreciation for granted, or sort of weren't even paying attention to it, just enjoyed the benefits, are now faced with the consequences of having large overallocated positions in US assets that are unhedged and are starting to shift back.